Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into Digital Ally, Incorporated's latest report to see if this company is on the fast track or hitting the brakes. Before we dive in, if you are someone who likes their financial news served straight up with no fluff, make sure you are subscribed. And if you want to chat about these filings with other like-minded investors, join our Discord community linked right down in the description. Now, what we have here is a very brief but important document, an 8K filing. Think of this as a current report that a company has to file when something significant happens that shareholders need to know about right away. It is not a regularly scheduled checkup, like a 10Q or 10K, but more like an emergency alert. The big event they're reporting happened on the 7th of November, 2025. This is the earliest date for anything reported here. The company in question is Digital Ally Incorporated. They are involved in the security and technology space. Tabula Triti Nevada and DTD. 001 negative 33,899 funny DTD 20 negative 00 64,269 funny TD Tontri table. Just some quick background details here, like where they're incorporated they are in Nevada and their commission file number and IS number. Nothing too exciting for us, but important for the filing. Their common stock is traded on the Nasdaq Capital Market under the ticker symbol DIGLY. This is their main stock that most investors will be watching. The most juicy part of this filing is under item 1.01, which is about entering into a material definitive agreement. Basically, this is a big deal contract. So on the 7th of November, Digital Ally Incorporated, or the company as they call it here, made a change to a previous agreement called a common stock purchase agreement. This new change is called the amendment. This agreement is with an investor. What is happening is that the company is going to pay a fee, called a commitment fee, to this investor. How are they paying it? Well, it is a two-part deal. First, it is being paid in shares of the company's common stock. And this isn't just a small amount of stock. It is going to be 19.99% of all the shares that were outstanding when the original purchase agreement was signed. The value of these shares will be figured out based on the average trading price over 5 days, ending 10 days after they get shareholder approval or when a specific registration statement is declared effective. But there are limits. The total value is capped at the commitment fee amount. And there is also something called a beneficial ownership limitation, which means the investor can't end up owning too much of the company. The rest of what is owed will be paid in cash, and that cash will come from 30% of any money they raise from future financing deals, including this purchase agreement itself. This is a pretty common way for companies, especially those that might be looking for capital, to structure deals. They're essentially issuing a significant chunk of stock, which dilutes existing shareholders, to fund something, and also committing future cash flow. A key thing to watch here is what the commitment fee actually covers and why it is so substantial that it requires nearly 20% of the company's stock and future cash flow. This could indicate a pressing need for capital or a strategic move to secure a significant investment. They're telling us this description is just a summary and that the real details are in the full amendment, which is filed as an exhibit. This is standard practice. For us, it means we've covered the main event that triggered this filing. This section is all about the exhibits, which are the actual documents that back up what they're reporting. Tabultrad exhibit number, civit to exhibit TD train table here. They list Exhibit 10.1 as the form of the first amendment to the Common Stock Purchase Agreement. This is the actual contract. I know we don't have the big financial tables in this specific 8K, but here we are essentially seeing a company proactively managing its capital structure and funding. A significant portion of the payment being in stock means dilution for current shareholders, depending on how the stock performs and the overall market sentiment. This could be viewed as a necessary evil to secure funding or a signal of potential financial strain. Now, looking at Digital Ally Incorporated, this type of financing can be seen from two perspectives. On one hand, it shows the company is actively seeking to grow or manage its operations by securing funding. On the other hand, paying a large portion in stock can dilute the value for existing shareholders. It is a trade-off that companies make when they believe the future growth prospects justify the immediate shareholder dilution. The fact that they are using a combination of stock and future cash flow from financing suggests a strategy to manage immediate cash needs while still securing funds for the long term. What is definitely worth keeping an eye on with this kind of arrangement is the beneficial ownership limitation. This is a standard clause to ensure that the investor does not cross certain ownership thresholds that could trigger additional regulatory requirements or changes in control. It is a sign that both parties are being careful about the size of the stake being taken. In conclusion for this filing, Digital Ally. Incorporated is making a significant move to secure funding through an amended stock purchase agreement. The key takeaways are the substantial stock issuance, implying dilution for current shareholders, and the reliance on future financing rounds for cash settlement. This highlights the company's focus on capital infusion, and investors should be mindful of the dilutive effects and the dependence on future financial market conditions. Alright, that is our breakdown of this particular filing from Digital Ally Incorporated. What is your take on this stock and cash financing arrangement? Do you think it is a smart move for the company's future growth or a sign of underlying financial pressure? Drop your thoughts in the comments below. If this analysis was valuable for you, hitting that like button really helps us out, and it signals to YouTube that we're providing good content. And of course, subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next video.